Welcome to TradeTheMBI.com. This is John. This report is for the 1st of July, and well, we're going to start the second half after a pretty steep decline from the first half of the year. 20%, that's pretty significant. We can see this latest down move coming here with the breakdown of the MBI magenta there, and at the same time we ended up with the fade of DOC green where cyan catches up and then form that separation. We actually had much deeper decline, but was bought up pretty well. And again, this is that theory that because things are deteriorating quicker, the Fed will have to ease sooner, and therefore that's bullish. And while that has some validity in some minds, at first you're going to have to deal with what will be the extent of the downdraft first. So that definitely plays in the market. Of course, by July 4th, new fund money will come in, but of course we have the holiday there. So currently still weak from that standpoint, but the fade off of MBI white certainly is going to help things. And also we have DOC orange starting to make its dip. Of course, it's not threatening until we get down towards the negative 7.5, but the potential for it turnaround here, which would create a higher P2 pivot, which is something we talked about coming down here. So if we don't quite make the low, that would certainly indicate a bullish turnaround within this. And of course, there's the euro. But again, every time we get towards that key danger zone, it's like it was a beautiful run. It was just so straight and clean. It's like you can clearly see the intervention. And of course, that was on the theory that the EU is going to buy disastrous Italian and Greek bonds and use the maturities of French and German ones to pay for it, which is basically just using one set of borrowed money for another, and rinse and repeat. Not going to work very well, because what we're starting to see in Europe here now is already the beginning of rationing, both in food stocks. I mean, in Greece you have sunflower oil and some of these other things that are being limited in quantities for sale in Italy. They meet at the beginning of the week to discuss the rationing of natural gas to large businesses, Germany doing the same. And that's going to have even more crippling effect on industry in the EU, which certainly it's not going to be a positive. Gold continuing to take a strain on that with the market fading, but also this idea that there's going to be this short-term deflationary element, which is something we talked about. Whether that's sustainable, and given the fact that you've removed Russia from the equation on it, certainly helps. So I still think that from a long-term perspective, there's nowhere but for gold to continue to turn around once we see that bottom. So it's going to be an attractive one when it finally makes its endpoint. And the reason being is, well, you look at oil, it's still over 108, and as long as it stays over that 100 marker, you're looking at persistent and sustained cost increase regardless. So get used to it. And of course, then you had the administration basically saying they have no desire, no incentive, and no concern about fuel costs where they are. And I think that it's very helpful because it's helping the liberal green agenda that they are promoting, and they're very actively supportive of that. So don't look for any change in policy. In fact, look for more restrictions on fossil fuels, which is what their true desire is. Said so by administration officials. So there you have it from that standpoint. That's not going to make things any better. And of course, that's the flight to treasuries here, skyrocketing, which is lowering the yield despite the rise in inflationary numbers and the theoretic Fed. I mean, the Fed says that they're still going to continue, so we'll see in their next meeting if there's a change in language, but I really don't see them changing course this quickly after making the move that they've made. It just would be a little bizarre, and it certainly wouldn't solve the issue because we're not looking at, I mean, if oil were plummeting or something like that, you might have a justification, but it's not. And turning to the wild ride of Bitcoin, broke below not just 20,000, broke below 19,000, and then massive short cover rally only to fade back, still right around that 19 range. So this is trouble for all cryptocurrencies. Seem to be having similar trouble. In the ETH here, we were, before we're in the mid 2000s, and now we're barely holding on to 1,000 at this particular stage. But again, it's just a beautiful one as far as relative trade from looking at it at the 5,000 tip level. Very clean. From the 50K standpoint, you can see we came up to the peak and then started to fade from there and kind of consolidated, still below the 50% level. We got red rising it, so the first fade of magenta should be a decent round of potential short capability, particularly as we've seen shakeout gold here, sort of flat now. It could begin another rise if the shakeout improves more, so we'll have to see how that transitions. But for now, not so much. And then intraday, from our 5K standpoint, we started off with weakness, trailing lower, and we kept getting sells throughout, and it was just a matter of waiting to see the build was starting for a potential rally, and then a little bit later, by the midday, the turnaround started as the euro started to bounce off of the comments that some people were calling tightening by to ECB, which still confused how they get to that depiction of it, given what they're doing. There's nothing about it. It's tightening. In fact, they're just going to have to continue to provide more and more liquidity, hoping that they can continue to find buyers for it. And if they don't, it looks like they're just going to create other vehicles and pretend that it doesn't exist, I guess, which has worked for the U.S. I mean, 30 plus trillion, not counting all the unfunded items for Social Security, everything else, and really know the impact that will potentially have. So after a little pop there, we had some positive extremes, those got all filled back in place, and then every time we had a clean sell signal, and for me that's that magenta closing below the yellow, but ideally after an upturn, like in this span right here, and it's something we're pointing out, I like to look for a move below the 25 to get a real consensus follow through, and if you don't get that pretty quick, you know that things are likely to go. Still, there's the debate, and it's a valid one, because even within some of these shorts, there's still 8 or so points to be made on the down moves in a lot of these cases. So I'm reluctant to just keep it all one color green, but I'm thinking of using an alternative color, just so you'll know that it's within what I would consider one of those areas where it's like I look for 4 to 6 points, and as soon as I see that magenta popping above yellow, take my cover money and say thank you, unless I'm getting a pretty strong continuation from the readings. So that's worth noting, and as I make that adjustment, I'll get it out to everyone. Coupled with that is the other topic I was talking about when I set up the indicators was the new indicator that's called chart indicators, and all that's going to be is just the fib levels combined with the ABM combined with the long and short algo, and as it is now, it creates a little bit too many overlaps, so I'm eliminating a couple of those so that they blend in, and that way the ABM will be able to follow nicely on short signals, and then obviously the ABM reset at our turnaround points, which is usually pretty much going to match right in there with our pink bars. Get us pretty tight in that. In this kind of configuration, when you have that magenta moving over, in this particular case, the orange dipping below happens a little bit earlier on that turnaround. So it's one of those where I'm still looking though for increase in checkout histogram, and of course that yellow crossing over magenta becomes the clear sign, and just a matter of making the adjustment for that dot image. And ideally, when on that chart indicator one, I'm trying to move the dots, which you can't get the actual dots, but I may be able to create like a colored asterisk version of it that would show up, and we can adjust how large that font size would be, and that would be the equivalent of having the dots on there. And it just is reducing the number of programs needed on a chart to just that one for the basics, and then the paint bar, and then of course whether you prefer to have the subgraphs or not. So it's just to simplify things as best possible, and that was the whole idea. It's just a little complicated combining some of those indicators that have existed for a while under the new language, and also with the paint bar card setups, so that it matches with those. But I think it's very exciting, and I'm close to having that pretty well completed. It's just some of the conflicts and just created too many lines with the different ones, and I wanted to be able to have it so that the chart becomes simple to read on that ADM reset, the ability to follow it, and the ability to see the short setup, and following that on a clean line for those that want to just constantly have to stop it. It would be just very convenient that way. Because a lot of times the way I've set it up, it matches with fib levels, and when that's taking place, then you're going to be able to have that conversion to it. And you can see post-market here, pre-market before the open here. Nice little pop-up, and then a little back and forth action taking place right now as things are evening out. And we're right back at these various algo points, and they become the support resistance. I mean, the top side of it was that 96 that we had from the breakdown at 23, and then in between there we had 84 and 68. And we continue to make additional ones, but nothing has been as prominent. A lot of them are close to making positives, but not quite. They're making a little yellow histogram, which is just shy of it. So that's the long and the short of it for now. As always, trade well. We'll talk to you later. See you on the Skype channel.